Finding the signal through the noise as geopolitics overshadow Fed decision day. Hey guys, it's Keith Allen. Oh, there's so much going on in the world and not sure Bitcoin really cares. Unbelievable what's happening in this world right now. Pretty sad to be honest with you, but is what it is. Hopefully those tensions cool off. But a lot going on today. Obviously, Fed rate decision day. In terms of what the Fed is going to do, no surprises there, right? We know the Fed's not likely to cut today, right? Let's just go ahead and say it. Fed is not going to cut today. If they did, that would be a huge surprise. We know the Fed doesn't like to surprise us. And we also know that 99.9% of the market surveyed does not think there's going to be a cut. So let's go with no cut. Typically, we're always listening for Fed Chair Powell's statements after these Fed decision meetings. And that will be coming up at a 2:30 Eastern Time press conference, which is about a little less than 3 hours from now. My expectations are that he's going to repeat his mantra that says, we are data dependent, we have a dual mandate, et cetera, blah, blah, blah. We've heard it dozens of times at this point. We know he is waiting for clarity on how tariffs are going to settle and looking for that data to, make some decisions in terms of when to cut. We did see some economic numbers come out today, and that also not likely to even cause the Fed to blink, to be honest with you. So we could take a look at these things, and then we're going to climb into the charts, of course, because we've got all this geopolitical tension, which I think is overshadowing the Fed decision day. And obviously, the world is on edge, anticipating what might happen. But I find it's not really helpful to hang on every word and watch the threats and the ultimatums get volleyed back and forth, because at the end of the day, what's happening in the charts is what matters. The key levels in the charts and the key and the invalidation levels in the charts are what's going to give us the insight of where price is going to go from here. So let's start where here's a glimpse of fire charts, and you can see that we've had a little bit of volatility here this morning, and it looks like price is trying to peek out past resistance here. We'll get into that in a second, but just wanted to show you what I was talking about in terms of the likelihood of a Fed rate cut, which, as you can see, according to CME, 99.9% of the market thinks no cut today. That probability changes over time, but whether we see that this summer or not remains to be seen. It might not be until later in the year. I think this is a fluid situation, and the Fed is going to continue to say that until they have clarity on the impact of tariffs, which we really haven't seen work their way into the system yet, because quite frankly, very few deals are done. Now, allegedly, the China deal is done or close to being done, and that's a big deal. But there's more, dozens and dozens of countries that are still negotiating with the administration on that. So since this is not an economic discussion, and we're going to talk, nor is it a geopolitical discussion, we're just going to talk about what's happening in the charts. So, and again, to feed that narrative on the Fed, unemployment, a big issue that they look at, and that's not really something to raise any eyebrows today. Numbers came in close to forecast. And so I don't see that as a big issue there. Market didn't really seem to care. So what's happening that might overshadow all of this noise? We can look at some of those things as well. Oh, by the way, live chat is open. Love to have you with me. If you have not done so yet, do me a favor, smash those buttons, hit that like, share it, invite some of your friends or community members into the stream so we can grow this channel. And of course, make sure you hit that subscribe button so you never miss any of the future streams. Again, live chat is open. If you got questions, I'll do my best to answer them. If you have insights, by all means, share them. If you're here to shill, go away. Simple as that, right? So let's go to the charts here. Okay. You can see Bitcoin price is pinned in a very tight range between the 50-day moving average, that's the red line here, and the 21-day moving average here, that's the green line. 21 has really been a key level. And so what happens if, obviously if we can reclaim that 21-day moving average, that gives us a chance at going back to all-time highs. If we lose this 50-day moving average, and this is now 1, 2, 3 support tests here in the last 1, 2, 3, 4, 5, in the last 6 days. This is interesting because if we lose this, where do we go from here? If we lose this, then for me, there's two key levels that I'm looking at, and obviously, well, I guess there's three really. Obviously, but there's some confluence between them. Obviously, these moving averages likely to come into play if price does break down from here. And the reason that I'm concerned that the price might break down from here is because we seem to be on the trajectory for a looming death cross between these two moving averages. These are the lower time frames, the 21 and the 50. Meanwhile, we're simultaneously on a pattern for a golden 200-day moving average. And those longer moving averages, obviously they're all lagging indicators, but those longer moving averages, in my opinion, are the most important. This will impact shorter term, near term price action, whereas this may have some more macro implications. And if we look at it on the weekly time frame, we can see that all the moving averages are currently unwound, and this looks solid. So other levels that I would be looking at, if we were to lose those daily moving averages, would be, where's the 21-week moving average, by the way? 21-week moving average is right at around 90, just shy of 95K. We have this trend line here that sits roughly in the 91 range, at least today. And that's obviously, increases a little bit every day. But the other level that I think is really important to watch here is the annual open, which was at about 93.3. And we actually have an indicator that shows us that. Let's see if I got that one open here. Here it is, timescapes. Yeah, you can see Doge has lost a key level, and this is in jeopardy. I was actually considering taking a position on Doge after this pullback, but Doge could actually fall a lot further. So I'm waiting to see how this develops here. But in terms of Bitcoin, let's take a look at Bitcoin and see what these key timescape levels are. Helps if I type it correctly. Let's just look at the index here. Okay, so the yearly open and the first week of the year, those are all kind of in play here. The yearly open was down here at 93.3, and or 93.4 on this exchange. It depends on what exchange you're on, but somewhere in that range, just shy of 93.5K. And first week of the year open was at, let's see, 98.3K. So these levels could come into play, and you can see that there's some confluence here between the trend line and this 98K level. That's the first weekly open of 2025. And then secondary support down at the 2025 open down here and that 93.4K level. So all of this, and then of course we do have a 618 fib in here, and we have these key moving averages in here. So these are all, in my opinion, legitimate potential targets if we do have a breakdown. Now, what could cause a breakdown? While I said that tuning out the noise on this geopolitical tension is probably going to serve you well. It is important to stay in tune to the key developments, right? I mean, if the U.S. gets drawn into a war, that obviously could have some macro implications here. But until that happens, it's noise, and it's political volleyball, if you will, right? Rhetoric flying in both directions, ultimatums flying in both directions. They don't serve you well. If you respond and you push buttons relative to everything that you read and hear between now and an actual real development in this conflict, then you're likely to get shaken out. And that's exactly what the market is trying to do. Market makers are trying to shake you out. Institutions are trying to shake you out. Why? Well, it just so happens, and I posted some of this stuff yesterday that's worth sharing. Let's see where I put that yesterday. I think it was over on the Black Knox channel. Let's see. The Genius bill, stablecoin bill, passed Senate yesterday. This was a huge deal. Okay, this is really paving the way, in my opinion, at a macro level, for a lot more to happen in terms of crypto adoption and other offerings, right? So this is going to in multiple ways increase adoption, because it's going to open up on ramps that may not have that weren't previously open, especially with a lot of banks. Now, some banks in the U.S. have allowed us to on ramp to exchanges, while others do not, and this is going to pave the way for that. And if banks are on ramping, then there's also a potential that this turns into or develops into something where banks can start, if they get their feet wet, they get their toe in with stable coins. And now we know that JP Morgan, for example, is going to offer collateralization of BlackRock's Bitcoin ETFs. And if they're going to let you collateralize your ETF holdings, then why would they not let you collateralize your actual physical BTC holdings? I just think that is the next step. They're probably trying to push the ETF angle, because that's an area that they have some knowledge and expertise and a level of comfort, and it's a partnership they have with BlackRock. But that's one bank and one fund. Lots of banks out there have the ability to create their own products, and this Genius Act actually gives private companies, including banks, the opportunity to create their own stable coins. Now, JP Morgan, who has been anti-crypto since day one, is now launching. They're the ones who are launching, who are giving customers the ability to collateralize their Bitcoin ETFs, and they are going to, looks like, launch their own stable coin. Now, how does this differ from a CBDC, a central bank digital currency, which nobody in the U.S. wants? Well, central bank digital currencies could be monitored by the government. Well, if you're using JP Morgan's JPMD, their stable coin, which hasn't come out yet, but this is something that they're trying to develop if this indeed passes into law, still has to go through Congress. Then what keeps them from tracking your spending or regulating what you can spend your money on? So that's a topic for another discussion, and one we could probably go deep in. Probably need to do more research on it, but that might be an interesting topic for discussion. Nonetheless, I think this has macro implications. I think it is macro, long-term bullish. I also think it is an illustration of the fact that if you already own Bitcoin, you're early, and congratulations on that. So this is just one of the many things that I think have macro implications. I also think the ETF flows for Bitcoin and ETH are important to stay in tune to. We can see they have been, especially BlackRock, has just been really on a steady, consistent grind upward in terms of their inflows. So I think that is noteworthy. We're hearing a lot of talk about Ethereum and also Solana, and that Solana could potentially overtake Ethereum. There's a lot of Solana ETFs being applications seem to be getting floated into the SEC. So these are assets to watch. Of course, my focus, at least my primary focus, is on Bitcoin. So let's take a look at what's happening here. As I shared with you guys earlier in the week, actually yesterday, we spotted some manipulation in the charts. If you didn't see it, it is on the material indicators X channel, where we could see one entity that was literally moving liquidity. We saw this these two walls right here were about 9.5 million each, so 19 million total. They combined and moved up here. This was about 17 and a half or 18 million. They then stair stepped up, and you see how price responded to that. They moved it back down. Price came down with it. They stair stepped down again. Price eventually came down with that, but I did not expect this to hold. If price approached this, I expected a rug pull, and we actually got it. What was surprising, though, is price didn't crash all the way through. Buyers came in. Now, whether this was the same entity that just kind of bobbled it and price didn't do what they thought, so they started buying, or another buyer kept things afloat, whatever the case is, price did not dip really significantly further. It was like $1,000, but we didn't get down into the 100 to 102 range like I thought we might. And you could see we could conceivably go further here. This is 95, 96, 97. This is that 98K range. Of course, down here is closer to where that yearly open is, where we have some bid liquidity here, but this is actually not above the yearly open. This is kind of a backstop behind it. So I think that we could potentially see more dip, especially, even though the Fed's not going to cut today. We're always listening to Fed Chair Powell's statements, right? And I think what the market is going to be looking for and listening for is whether or not Fed Chair Powell feels that a recession is imminent or stagflation is imminent. We haven't seen that yet. In the past, he's been commenting on the strength of the economy, so that has really what's kept them from cutting, and it's really helped keep the market up. And as I told you this a few minutes ago, unemployment still looks pretty solid here, or the employment rate looks pretty solid, and so that's part of their dual mandate, is to make sure that unemployment does not spike on them. And so far, that hasn't happened. And we also haven't seen the net effect of what tariffs are going to do, because we don't know what the tariffs are. And those are the things that I think the Fed is waiting for. But he may comment that what he's already seen could have a significant impact. And I think the market is likely to respond to that. Now, back to the current price action. Because we are hovering in this range between these key moving averages, I think we're actually going to stay in this range unless, if Powell gives us an indication that they feel recession, there's an increased possibility of a recession, that could send prices below this 50-day moving average. And if he instills any confidence, that could send price back up above. But this trajectory at this stage seems like it is imminent. And so I'm not confident that we're really going to have a sustainable move until two things happen. One, and I'm not taking these in order of importance, I'm taking these in order of how they have transpired. One being some clarity on tariffs, right? I think that window, that first 90-day window that was opened, I think that the negotiating window on tariffs, the first round that came in April, what was April, May, June, July? So that was like the first week in April. So that gets us to like the first week of July till those first round of deals are allegedly going to be negotiated. It doesn't sound like a lot of those deals are locked up yet. So that will be interesting to see how price reacts to that news. Second, obviously, the geopolitical tension in the Middle East. Not going to get into the debate of the actual event. We just know that drawing the U.S. directly into that conflict, on the offensive rather than just helping defend Israel, is not something that the American people really want. And it's also not something that the rest of the world really wants, because it could really, really escalate things not just with Iran, but also with Russia and North Korea. And that paints a scenario that I'm pretty sure nobody wants to get into. So, in other words, we range until we have some clarity on these things, and that range is an expanded range at this stage with our all-time high at 112, our trend line down here around 91 and a half, 92, and of course that yearly open I think is very, very critical to watch, and that was around the 93.4 range, 93.4K on the yearly open. So that's what I'm looking at in terms of order flow and liquidity. We are rebounding a little bit from the day's lows, but we don't have any robust buying out of whales at this stage. So I'm not confident that this holds. I think that this is just traders doing what they do. If you are trying to time this based on the news, you're going to have a real hard time and probably get shaken out. A lot of people have been liquidated in the past 2 weeks, and I don't want you to become one of them. So pick your targets and know your invalidation levels and your time frame, right? If you're investing for the long term, you're probably going to be okay if you just ride this out. If you are trying to add to a position or build a position, then look for those dips down to key levels for as buy zones. If you're trading, then trading the range is quite simple. When you get to those key resistance levels, look to see if we're going to break it or if we're going to get that rejection, and that will tell you where to place your entries, your stops, and your take profits, and of course your stop loss too. Right? If you lose these key support levels, you probably don't want to take this ride all the way down. Right? So pay attention to that as well. Going to wrap it right there for the day, guys. I'll leave you with a parting shot of the order book. Let's zoom out a little bit and see if we have anything really developing in here. When this rug pull happened yesterday, it does look like some of it may have been converted into a bid ladder that extends down to really all the way down to about that 97, 98K level. So don't rule this out as a possibility. I think it's a gift if we get it. Certainly, if you're dollar cost averaging your entry, you want to try and find these spots if you can get them. And if you are reluctant to place your limit orders because you don't want to catch knives, and I can advocate for that, for not catching knives, then you can use something like a mean reversion indicator that will help you pick these targets. This is our MTF mean reversion indicator from Material Indicators. It is actually thrives on 1 minute time frames and will help you identify the dips with a high probability of bouncing, as it has done time and time again. I've been using this indicator for really, since before we even started the company, 6 years, 6 years ago. And I could tell you it's rock solid. Here's an example of the last signals that I received at this deviation a few days ago. And obviously those have moved into profit, and I'm quite happy with that. So with that, we're going to wrap it. Parting shot of the order book here. As you can see, we do have some bid liquidity down below with support down to about that high 97, 98K level, and really thin liquidity to the upside, at least until we get back to about that 108, 109K level. And with that, I'm going to wish you guys good luck. We'll be listening at 2:30 to see what Fed Chair Powell has to say. Again, no cuts scheduled for the day. We're really just listening to see if he drops us any breadcrumbs or Easter eggs that can give us some insight into what the Fed is thinking and what the outlook is for the U.S. economy. Hope that gives you some insight and helps you out, guys. Thanks again. If you have any interest in any of the tools that I shared with you, links are in the description below. And if you haven't done so yet, make sure you smash that like button. If you found this video helpful or insightful in any way, please share it and help me grow the channel. Appreciate you guys. Here's to trading smart.